There are a lot of messages in the words on the screen in the first slide. Certainly we're entering a period of considerable change in property markets around Australia. But the most important word on that screen is the word really. What's really going on, as opposed to what media is telling is going on in property markets across Australia. So tonight I'm going to try and give you an accurate, balanced and fair synopsis of what's going on in property markets across Australia. And I'm going to have a fairly major focus on the market that we're all sitting in right now. Some of us are standing, Perth, because I've been saying to a lot of people who come to us for advice that we see Perth as the city of opportunity right now, and not the only one across Australia, but certainly one of the ones that are top of our list. And I'm going to be explaining in a little while why we believe so. I started working life as a newspaper journalist. I worked in major newspapers in New Zealand and Australia for about 12 years, and then gravitated out of that, where I had gained a specialty in researching and writing about real estate, to doing that kind of thing as a consultant to the industry. And 12 years ago I started the hotspotting.com.au website, which is designed to help people decide where are the best places to buy for future price growth before prices grow, because that's the key thing. Most property investors, I'm sure none of you are like this in the room tonight, but most property investors are herd animals. They'll dive into a market when they read in the newspaper there's a boom on. The smart people are positioning themselves in markets before that happens, and our business is designed to try and help people identify those opportunities. But just keep in mind that basically by career, I'm a newspaper journalist by trade, and keep that in mind as I tell you what I think about the way media covers this really important industry, the housing industry. I don't think I've ever seen a time in my more than 30 years in and around media and in and around residential property where the reportage of this really important industry is so bad. It's appallingly bad at the moment. And so we've got what I call the great seething mass of media misinformation, and it's particularly bad right at the moment. And I think it must be a very, very confusing time for real estate consumers trying to make sense about what's going on. It's a very scary time because there's a lot of very negative media out there at the moment. There's a lot of headlines like this one: Australian house prices fall for the 11th month in a row. That was the Age newspaper in Melbourne. The slide in Australian home prices set to continue. Look, we're seeing headlines like that every single day. And of course, last weekend, I don't know if many of you saw the 60 Minutes or heard about the 60 Minutes segment on what's going to happen in the Australian property market. I'd like to actually touch on that briefly, because before they actually put that story together, they actually called me and asked me to be interviewed for that 60-minute segment. Then they told me what their plan was. They were going to put together a story that said that values were going to fall 40 or 50%. They actually decided that before they interviewed anybody or did any research. And when I told them that I didn't agree with their preconceived negative headline, they terminated the phone call very quickly and no interview took place. That was the sort of story they set out to achieve. They didn't present any alternative viewpoints. They just kept making phone calls until they found somebody willing to stand up and say values are going to fall 40%. I did some research a couple of years ago to look at what media predicted since the turn of the century for Australian real estate, and then compared it to the actual outcomes. And what I found was that those kind of Armageddon predictions for Australian real estate are actually really, really common. They're occurring all the time, mostly by people who are visiting Australia to do a seminar tour or a book launch, and they want to drum up free publicity. And a great way to get it is to predict 40, 50, 60% decline in our property values. And out of that I predicted this, I compiled this, my top 20 worst predictions about Australian real estate. And there's some absolute shockers. What they all have in common is they've all been absolutely spectacularly wrong. We had a guy called Jordan Wirtz from the United States who came to Australia in 2012, and he predicted, to achieve free publicity, that housing values were going to fall 60% in a bloodbath starting later that year, and that our land values were going to fall 90%. Can you imagine it? He was basically saying that all the land across Australia is going to be basically worthless in the next 12 months. Harry S. Dent, you may have heard of him. He's a guy who makes his way around the world predicting Armageddon wherever he goes. And he's been to Australia 3 times in the last 7 years, and each time he has got free publicity by predicting a 40-50% decline in our property values. He did it in 2011, 2014 and 2017. In the next 12 months, he said, this was going to happen. He's been wrong every time spectacularly, but he's coming back next month, and let me make a prediction, he will do it again. And media, rather than say to him, hang on a minute, you've got no credibility because you've said this 3 times before and you've been wrong every time, they will give him another round of wonderful free publicity so we get lots of bums on seats for a seminar tour and make a few more million from predicting doomsday sorts of scenarios for Australia and the rest of the world. Lots of other predictions like that in this list. 60 Minutes at the weekend was just another. I hope you're all intelligent enough to see it for what it is and to just disregard it and get on with business. But it's all part of this, the great seething mass of media misinformation. Headlines like that. But what's the reality, what's happening in Australian real estate? Because we're having these headlines saying property prices are falling across Australia. Now, the source of a lot of that data that those headlines are based on is actually CoreLogic, the most quoted property research firm in Australia. They're the most publicity-hungry firm I've ever encountered in my life, and they're pumping out press releases every day where their ambition is not so much good information but free publicity. But their latest report actually paints a much different picture when you actually look at the data in the report. There's a graph there in the report that came out at the start of this month where they divide Australia into 14 major market jurisdictions. Each of the 8 capital cities is a market, and then you've got 6 major regional areas, New South Wales regional, Western Australian regional, etc. So here they are all listed, and in 9 of the 14, property prices are actually up over the last 12 months. They're actually higher than they were 12 months ago, and it's only 5 of the 14 where prices are down. Yet we still have these headlines every day telling us the property prices are falling across Australia. And why is that? It's because the capital city average is a negative figure, and the reason for that is, according to these figures, Sydney is down a lot, and Sydney is so big that it weighs down the national average, so that the national average figure for prices in the last 12 months is a negative figure, hence the headlines, property prices are falling in Australia. They tend to treat Australia as a signal market, and I'm here to tell you that that's very misleading and inaccurate, and I'll talk about that more in a little while. But there's 2 things to understand about property price data quoted in media. The first is that it's presented by media, each set of figures, as fact. This is what's happening with prices, therefore sweeping conclusions. But the reality is it's just a snapshot, an opinion from one source. There's lots of different sources of price data. They seldom agree on anything. They all have their own methodologies, and they're all coming up with different numbers. I'm going to demonstrate that to you in a small way in a moment. But it's always presented as fact without any qualification. And the next week another set of figures will come out from another source which will say something quite different, and the result for people like yourself, for real estate consumers, is massive confusion. So I just thought I'd compare 2 sources and look at the numbers from 2. There's probably 5 major sources of price data. We've got the ABS, the Bureau of Statistics. We've got the Real Estate Institutes. We've got SQM Research. We've got Domain. We've got CoreLogic. If I put them all up there, you'd just be massively confused and it would be impossible to make any sense of it because they seldom agree on anything, and that's the central point. So to make it simple, we'll just compare figures, the latest figures on how much property prices have grown or fallen in the major cities from 2 sources. And you'll see that this source reckons the Melbourne market is down, but this source says it's up. This source says Adelaide's risen a little, but this source says Adelaide's fallen a little. CoreLogic reckon Perth is still down, but SQM Research has Perth actually prices now starting to rise again on average. And I would also point out that the latest figures from the Australian Bureau of Statistics, which came out in the last week, also have Perth now back in the black with its housing market. But you've got this contradiction of one source saying prices are down, the other source saying they're up. Canberra, they both agree that Canberra's rising, but whereas this source is only rising very moderately, 2.3%, SQM Research reckons it's having a property boom. It's getting double-digit growth. Now we see these kinds of contradictions again and again and again. The average across the 8 capital cities, according to CoreLogic, is a minus figure, but SQM actually has a positive figure. So one source says Australian property prices are down, the other source is Australian property prices are still up. Similar if you look at the apartment markets, this source says apartment prices are falling, this source says they're still rising, this source says Melbourne's not growing much, but this source says Melbourne's growing quite strongly still. We've got the Brisbane market rising moderately or down a little. We've got this Hobart example is one of the best. If I put all 5 up there, you'd be massively confused because SQM Research reckons that market's falling 5% in the last 12 months. CoreLogic says it's up 7.5%. Now, the 3 other sources, they have the Hobart apartment market up 10%, 15% and 23%. So the range for their assessment of the Hobart apartment market is either -5, ranging up to 25% in the positive. How do you make any sense of that? One of them says they're having an outrageous property boom, but this source over here, SQM Research, says the market's falling. They're all talking about exactly the same market. How can it be so? Isn't it a fact as to whether prices are rising or falling and by how much, you would think? Well, apparently not. And the message that you should take home with you is that you can't place too much importance on these numbers. They're all rubbery figures to a certain degree. You might ask the question, well, who's right and who's wrong? I think probably they're all wrong to a certain degree. It's all dodgy data. When you consider what they're trying to achieve, they're trying to distill all the market activity in a market as big as Perth and a city as large as this down to a single figure, saying this is what's happening with property prices in Perth right now. Well, you can't actually do that. And I'll show you in a little while that there's actually a lot of different things happening right now in the Perth property. There's some sectors that are rising really strongly in Perth and others that are going pretty moderately and some that are still down. But this desire to distill everything down to a single figure results in these kinds of distortions and contradictions because they all have different methodologies and parameters, and like I said, it's all rubbery figures to a certain extent. So do not base any really serious financial decisions on the numbers you read in the paper trying to depict what's going on with our property markets. Okay, so I get asked a lot of questions by real estate consumers, particularly property investors, and the question I'm getting asked the most at the moment is this a good time to buy? And what I say to people is it's actually the wrong question. A much better question is where is it a good time to buy? Because I believe that in a country as big as Australia with all the regional diversity that we have, the different circumstances playing out in different parts of the country at any one time, it's always a good time to buy somewhere. And your job as investors is to find where that somewhere is at any given point in time. Some other good questions that you might ask is, why did Sydney rise so strongly, but Canberra, which is only 3 hours down the road, why it didn't have the same sort of boom that Sydney did? Why did Perth go through the slump that it did? While Sydney and Melbourne have been rising for 5 years, Perth has been going in the other direction, and so has Darwin. And how come Brisbane hasn't shown much growth? Why all these differences? Because if you ask an economist why Sydney had its boom, they'll say record low interest rates, or they'll refer to negative gearing tax benefits. But that can't possibly be the answer because those conditions are identical everywhere in Australia. So if it's record low interest rates, Perth should have had a boom like Sydney, and so should Brisbane and Canberra, but they didn't. Why not? Well, the answer is that it's really got nothing to do with those big national broad picture things like interest rates. It's about what's happening locally. It's about what's happening in your local economy, whether the economy is growing or not, whether it's creating jobs, whether there's big spending on infrastructure. All those sorts of factors in the local economy are the things that feed into and dictate outcomes in your local property market. And I'd like to illustrate that point by referring to the ComSec State of the States report. One of the videos that you saw a little bit earlier referred to that report. Ross Greenwood was on the screen talking about the latest one and what it was telling us about different parts of Australia. So that's on the left-hand side. This is a summary of how the various states and territories have ranked over, say, the last 3 or 4 years, roughly, according to the ComSec State of the State reports. Now, on the right-hand side, I've ranked the capital city property markets in terms of their price performance. And what you might notice is that's an absolutely perfect correlation between the two things. New South Wales has been ranked the strongest economy, and Sydney has been the #1 property market. Victoria has been a close second in terms of economic performance, and Melbourne has been the second strongest property market. Right down to the bottom, the Northern Territory is ranked the weakest economy, and Darwin has definitely had the weakest property market, with prices and rents going backwards and still doing so right now. So this is not a coincidence. This correlation between the two things is happening for a reason. It's because what's happening in the local economy, not the national economy so much, locally, is what drives and dictates real estate outcomes. So it's worth just dwelling a little bit on why Sydney had the boom that it did, because, say, pre-2013, Sydney had been the great underachiever of the Australian property market. Prices had done nothing for 10 years in Sydney. But suddenly the market burst to life. Why did that happen? Well, there was a change of government in 2011, a landslide election result, and that new government started proactively regenerating the New South Wales economy. And more importantly, it started spending really big on infrastructure, because there had been 10 years with very little spending on infrastructure in Sydney. That really turned things around. And very quickly, in 2011, at the time of that election, New South Wales and the ComSec State of the State reports was actually 7th, second last. It very quickly rose up the rankings to become #1, where it's been for the last 4 years. And out of that came the Sydney property boom, helped by other factors such as population growth and infrastructure spending. But I can't overemphasise the importance of spending on infrastructure to a revival of a property market. And it's very significant, I think, for Perth that we currently have and are soon to have really significant spending on infrastructure, because it's a huge generator of economic activity and jobs in a city. And it's very influential in terms of the performance of the local property market. So this was a huge factor. Sydney has been spending more on infrastructure in the last few years than all the other capital cities combined. It's been quite massive. Tens and tens of billions of dollars on motorways, rail links, hospitals and schools and universities. And that's been a huge factor in the Sydney property boom. Melbourne has also been a big performer, strong economy, the #1 population growth city in Australia for several years and still is. The latest figures came out earlier this week, and Victoria and Melbourne are still #1 in terms of a lot of its overseas migration coming into Melbourne. And so that's helped to push along the property boom in Melbourne. It's worth pointing out that while the media is talking about prices falling in Sydney and Melbourne, it's not actually true in all sectors of those markets. There's still parts of the Sydney market that's still very buoyant and prices are still up, and the same is true of Melbourne. And it's particularly those most affordable areas on the fringes of those two cities. Right now, and it seems a contradiction to say it, because one of the other things you'll be hearing in media all the time is about the affordability crisis and how there's a whole generation of young Australians locked out of the market because prices are too high. And it simply ain't so. Right now, first home buyers are more active across Australia than at any time in the last 6 years. That's shown by the lending figures. And the places that are most active above all are Sydney and Melbourne, which seems ironic because those are our two most expensive cities. But they've been boosted by incentives at a state government level, including stamp duty concessions. And so they're out there buying. Home loan approvals for first home buyers in annual terms are up 74% in the last 12 months. It's a massive increase. They're really out there buying. So those fringe areas, our two biggest cities, are still very, very busy markets, and prices are still rising there. It's also happening according to the figures in Western Australia, and for Western Australia, read Perth. So first home buyers are out there busily buying again in Perth, and that's one of the factors why we feel that the Perth market is moving into a recovery phase, which I'll talk about in a little while. Just to give you an idea of, again, media's telling us prices are falling in Melbourne. Well, not in all parts of Melbourne. These are some of the cheaper suburbs in the northern outskirts of Melbourne, Thomastown, Layla, South. These are the percentage rise in their median prices in the last 12 months, 28%, 25%, 20%. Doesn't look like prices are falling just yet in these markets. These are the first home buyer markets, really active, really strong price growth. These are the sorts of things that are happening, that are actually really happening in some of our major markets, while the media is telling us that prices are falling everywhere. So right now, Hobart is the hottest market in capital city Australia, something that we predicted 2 to 2.5 years ago because we could see it coming. It's risen up the economic rankings. Traditionally, Hobart is ranked 8th and last on the ComSec report, but in the last few years it's risen up to number 4 position, and that's a very, very lofty position for Tasmania to occupy, to be the 4th ranked economy in this country. But out of that has come a property boom in Hobart, and now that's started to ripple out to the regional areas of Tasmania as well. So these are very, very active markets right now. Lots of sales happening, prices rising in double digits. And it's been helped by the fact that Hobart, until recently, was the most affordable capital city in Australia. Vacancies have been ridiculously low for several years, 0.5%. Rents have risen in... It's one of the dichotomies of the market in the last few years, that while we've had the strong price growth in cities like Sydney and Melbourne, we haven't seen much in the way of rental growth, but there are a couple of exceptions to that, and Hobart is definitely one of them. Very strong rental growth because vacancies have been so low, and because prices are still rising there, it's predicted it will soon overtake Adelaide and Darwin in terms of its pricing levels, and will no longer be the cheapest capital city in Australia. So the question is, where next? And one of the little grab messages I'd like you to take home with you tonight is that you should think small for big growth. And what do I mean by that? Think small, I mean the smaller cities, because for the last 5 years it's been about the really big ones, Sydney and Melbourne, and media is absolutely obsessed about that and extrapolated what's happening there to the whole country and talked about a national property boom. Well, we certainly haven't had one. And right now, as those markets wind down, the media has changed its story. Now it's telling us the whole nation is in downturn. Well, it simply isn't so. And where we're seeing really big opportunities for investors right now in some of the smaller capital cities and some of our better regional centres as well. So think small for big growth is the message to take home. I just want to point out that some of those smaller cities have quite a track record of substantial growth. This is something that was published by PIPA, Property Investment Professionals of Australia, a month or two ago, where they looked at the last 30 years. They broke it down into 5-year periods and looked at who were the market leaders in terms of house price growth in each of those 5-year periods. And we found there was a period when Brisbane was the strongest market in the city, Darwin twice, rather surprisingly, because right now Darwin is a bit of a basket case market, but twice in the last 30 years has actually led the nation on price growth. But the most remarkable of all is this one right here. Perth, in the 5 years from 2003 to 2007 inclusive, when the increase in property values in Perth was actually almost double what Sydney's done in the last 5 years. It just puts it into perspective, because media keeps talking about Sydney's unprecedented property boom. There's nothing unprecedented about it. There have been several periods, as you can see from those figures, where other cities have done a lot more in percentage terms than Sydney's been doing recently, including this rather remarkable period in Perth, pushed along by the resources investment boom, obviously. But that's an extraordinary period of growth. And there have been other periods in the last 30 or so years when Perth has had very, very strong growth periods. Just to remind you, because it's very easy to forget when you've been going through a downturn and maybe your property is worth a little bit less than what you paid perhaps, that it's easy to forget that Perth actually has a very, very strong record on growth historically, both for population, economy, and for real estate. So in terms of where next, because certainly overall the party is over for Sydney and Melbourne. One of the possibilities is Canberra. It's the number 3 ranked economy in the nation. It's got the highest wages, the lowest unemployment, always because it's that capital city. Consistently low vacancies, the best rental growth in the nation, and it's actually a rising market. It's actually doing the opposite to Sydney. The two cities are only 3 hours apart by car, yet while Sydney was rising so strongly, Canberra was fairly dormant. Now as Sydney is fading, Canberra is starting to rise, and it's because of the strong economy, the low unemployment, the high rental growth, the very low vacancies. So that's a market that's starting to rise, but very seldom gets talked about when media discusses markets of note. In terms of where next, what will be the next boom city? Adelaide. It's very hard to convince anybody that Adelaide is worth considering. It's just got this reputation of being a low-growth city and a low-growth economy. I think it's going to surprise a lot of people. I'm not going to spend a lot of time on it tonight because I really do want to talk more about Perth. But there's things happening in that economy that a lot of people don't realise. It's got this massive emerging economy for high-tech innovation. It's the national capital of that, and it's not really given credit for it, although the people in the know are actually moving their national headquarters to Adelaide because of it. It's certainly the national leader for alternative energy, solar farms and wind farms. It's also got these amazing contracts to build vessels for the Navy, $90 billion worth over the next, say, 20 years. It's massive. So we're going to see some really big things happen in Adelaide, and it's going to surprise a lot of people. It's also a city with great value for money. I mean, when you go to middle market suburbs in Adelaide and see the quality of the housing and look at the pricing, the same real estate would be $800,000 or $1 million in Sydney and Melbourne, but it's sort of $400,000 and $500,000 in Adelaide. It's great value for money. So I think it's going to surprise a lot of people. But yeah, in terms of where next, we have started talking about Perth about 12 months ago, and we started calling Perth the city of opportunity. And that was because, firstly, prices had been dropping, so the buying was particularly good. But more importantly, we could see that it was actually through the bottom, and the worst of it was starting to move into a recovery phase. Now, a couple of the people who spoke earlier talked in terms of Perth being maybe at the bottom, close to the bottom. I actually think it's beyond the bottom. And it depends how you measure it. Most people measure it in terms of prices, and we don't. We think prices are a pretty blunt instrument really for measuring markets. We're actually more interested in demand, sales activity, and I'll talk about that in a little while. But we could see the turnaround in sales activity in Perth 12 or 18 months ago. But putting it together with other factors, we could see the recovery coming. There's no doubt that the economy is recovering, that the resources sector is coming back, jobs are being created again, wages, particularly in the resources sector, are rising. I'll put a figure up on the screen shortly which will illustrate that. We're seeing big growth at the top end of the market, and vacancies have come down a lot. The latest figures for vacancies show that in the last 12 months, according to SQM research, that's one figure, it's gone from 4.7% to 3.4% in the last 12 months. So it's starting to get down to that magical benchmark 3% where you're really going to start to see rents rising again. And there's already evidence in some of the figures that rents are starting to increase again in Perth. So again, we've got these contradictory figures from the different sources, but the ABS and SQM research for the housing market at least are now seeing prices starting to move into the black again in Perth, although CoreLogic still has it a little bit negative. But some of these other sources are saying that prices are now starting to lift on average. And just wanted to remind you that according to Pippa, these are some of the growth rates that Perth's achieved in previous 5-year periods, including that really big one I mentioned. You can see that it's been a while, and Perth, which has a history of strong price growth in the housing market, is overdue. But it's been waiting for the economy to improve, because as I said earlier, that's where it all comes from. The local economy, what's happening in the Western Australian economy is very pivotal, and it's starting to improve. Now I just want to ask before I go to the next slide, I think it's the next slide. What do you reckon the median house price in Perth was in 1970? Anybody want to hazard a guess? 25,000? 16,000. Well, if I had a cigar, I'd give it to you. Almost right. 17,500 according to these figures. How did you know?
I have an interest in this shit.
That's why Murray's at the front.
But it's kind of sobering to consider, isn't it, that if you'd bought the typical house in Perth back then, that according to these figures, at least by 2015, that's what it would be worth. And yeah, the power of compound interest and the way property markets can perform. You can see that late 80s, there was a growth spurt where over 5 years, property values basically doubled. And then there was this amazing uplift that some of the previous speakers referred to, during that sort of prolonged resources investment boom, where we just had this incredible uplift in values in Perth. So this is a market that really does perform when the economy is pumping. And what I'm here to tell you tonight is we're starting to see the signs of the economy starting to return to the good times. I don't think we're going to return to that resources investment boom time we previously had, because that was unprecedented. But we are certainly coming back into positive times. Some of the parameters that measure this, when you put it all together, a lot of the stuff is reported in dribs and drabs in media, and by itself it doesn't seem to mean much, but when you put it all together in a single pile and look at it, it's really a really strong story. And every week the story for Perth seems to get stronger, because some new piece of information that comes out that shows that this state and this city is starting to return to some stronger periods. It's starting to recover. So the population growth right now is growing at its fastest pace in 3 years. And those are some of the numbers. The number of people that were added to the state last year, starting to get back to those sorts of numbers from the past. Still a way to go. It's also worth noting that the fastest growing local government area in Australia since 2011 has been a Perth local government area. The Serpentine Jarradale local government area down around Byford, down in the far south. This is an area that's really growing strongly, ranks number one in the nation for population growth and percentage growth terms. So the Reserve Bank made its decision to do nothing earlier this month, and then it released its minutes just in the last week or so, and it commented on the Western Australian economy and how it was improving and how business conditions were rising in this state. And then the Australian Bureau of Statistics recently produced its latest figures on economic growth state by state, and it shows that the annual growth rate for Western Australia now is the highest it's been since 2013. So since the end of the resources boom, the growth rates for the Western Australian economy have been sometimes negative, but now they're back in the positive and are growing at the fastest growth rate any time in the last 5 years. And that supports the modelling that was in the budget in terms of Western Australia emerging from the economic downturn. And at the time you might have been cynical and said that was just the politicians trying to talk up the situation. Well, it's actually turns out they were right according to the latest figures from the ABS and from the Reserve Bank. And they're expecting to see 50,000 new jobs created over this year and next year, which is pretty significant. A number of the independent commentators are increasingly saying positive things about the economy of Western Australia and Perth, including Deloitte Access Economics. This is really significant. I think this is, in terms of jobs in the resources industry, this source, DFP Resources, their report said that jobs have grown for 13 consecutive months, and I think that's continuing now. And Seek, the online employment website, said that wages in the iron ore sector rose 35% in the last 12 months, and that's significant because it was going in the other direction for several years, but now it's starting to get back to the point where jobs are being created in that industry. They're looking for people and they can't find the people that they need, and so they're having to pay increasingly high wages to attract people from other parts of Australia or from other parts of the world to come and work in the resources sector in Western Australia. And this is also significant. This is nowhere near the levels we had in that huge boom previously, but they are nevertheless very significant numbers. $25.5 billion these three big resources entities plan to spend expanding their operations in Western Australia in the next 5 years. That's all really relevant for the Perth property market because it all comes back to the capital city and it starts to feed into the property market. So, yeah, CoreLogic has started to become increasingly bullish about this, what it says is the steady and healthy improvement in Perth. This thing, the buy rent index, suggests that Perth is currently experiencing the best buying environment in the last 5 years. And the Housing Industry Association, with its affordability index, recently declared that Perth is the most affordable city now, and by their measure, amongst the capital cities of Australia, the best time in a decade to buy or build in Perth. And there's some numbers on the next slide that kind of support that. National Australia Bank puts out a quarterly survey report where they predict prices looking forward, and their latest report predicts that they expect Western Australia and Queensland, and for that read Perth and Brisbane, are going to lead the country on capital growth for the next 2 years. That's their prediction. The numbers they're rolling out aren't that big, but nevertheless they are predicting that Western Australia will be one of the two states that's going to lead on price growth for the next couple of years. Yeah, I mentioned that SQM Research had noted the decline in the vacancy rate. It's actually 3.7% now at the moment. It's getting down towards 3%. The trend is in the right direction. REWA has noted that last month leasing activity was up 17%. Some figures that just came out today, I guess from SQM Research. I actually recommend that website to you. It's a really good independent source of all sorts of information about real estate, including vacancy rates and how much stock's on the market. A lot of it's free stuff, so SQM Research. And their figures out today, their rental index, for the first time in a long time, actually has rents for apartments and for houses in Perth in positive territory. So according to this index, rents are starting to rise again in Perth as vacancies start to come down. It's been a while since we've seen that. So it's just another piece of evidence that things are turning around in this property market. And this one is quite significant also, that first home buyers in Perth are the most active in the country in terms of market share, the percentage of the market that first home buyers are occupying. The highest percent of home loans financed in June of anywhere in the country. So all these things point to the market is recovering, and I think it's beyond bottom. It's actually starting to move up into that growth phase again. Just one other very important indicator of growth. What we see often is that an upcycle anywhere in Australia starts at the top end. We saw it in Sydney, we saw it in Melbourne. The first suburbs to move are the millionaire suburbs. That's because it comes out of the local economy. When the local economy is starting to thrive, the first people to feel it and realise it are the people who own businesses and the people who earn the big money. And that starts to translate into buying in the prestige suburbs. And we start to see those prices rise first. Now, right now in Perth, that's actually happening, and it's probably not getting a lot of media. But in the last 12 months, most of the $1 million suburbs of Perth have had substantial rises in their median prices, including many with double digit. I just made a quick list of those that are sort of up 10, 15, a couple of them are over 20% growth in their median prices in the last 12 months, including Applecross, Ardross, Claremont, Peppermint Grove, North Fremantle, Nedlands and Subiaco. So they're all places where we've seen that sort of 12, 15 or more growth in median prices in the last 12 months. Now, it's not happening across the board. In fact, it's not happening in any of the other market sectors yet that I can see, but I think it's really significant that it's happening at the top end because that's the cycle leader very often. So just add it to all the other scraps of information and you start to see a picture that something's happening in the market here. Don't be one of those herd animals who wait until you read there's a boom on. Now could be the time to consider taking some action in this market because before the prices really start to grow across the board. So I just want to touch on that a little bit because I talk to a lot of property investors. They text me, they phone me, they send me emails and ask questions. And this is basically the mentality. Yeah, I'm going to spend $500,000 buying a piece of real estate, but if you suggest they might spend $50 on a research report to help them buy in the right place, or maybe $500 on a valuation to make sure they're actually buying at the right price, or, God forbid, spend some serious money like $5,000 getting some really good advice to help them develop a strategy and some goals and objectives from a good advisory firm, they won't do it. They won't spend the small money, but they'll spend the big money, which is why so many people make really bad decisions when they go out and spend the $500,000 because they haven't been willing to access good information and good advice first. And what distinguishes, in my experience, from the people who are really successful with property investment and those who basically dabble but don't particularly get great results is they treat it as a business, not as a hobby. And in a good business, you've got to spend money to make money. So you've got to be prepared to put in time. You've got to be prepared to spend some money on good information and good advice so that when you go out and spend this sort of money, you're spending it in the right places and on the right product. So research is the key. If you're not willing to do it or pay someone to do it, then I think you're in the wrong business. You really need to do one or the other, preferably both. And I just want to quickly touch on some of the things that we do in terms of research to help us identify the coming markets. Some of the things that we do that are different from what most do, because most are looking at price movements. And if you read something that says prices have moved 10% in the last 12 months, basically they're telling you where you should have bought 12 months ago, which isn't much use to you. If you look at sales activity, demand, it actually happens ahead of the price growth. And if you know that demand is rising, but prices haven't moved yet, that's a place to buy. So we use that simple method. We've used it to predict the Hobart boom, the wind down in Sydney. The Sunshine Coast, where I live, is currently going through a boom, and we could see that coming for lots of reasons. The Perth recovery that I'm talking about quite strongly tonight, I'll show you some figures in a moment. And the Brisbane downturn in the unit market, which is a phenomenon that exists at the moment. So a couple of illustrations. This is a suburb of Melbourne. This is the sales pattern we saw 3 years ago. At the time, prices weren't moving very much, but we knew they were going to because there's a massive increase in demand in this suburb. And 4 years later, the median price has gone from 406,000 to 665,000, including 11% in the last 12 months. We predicted that growth because we could see the uplift in demand because we chart sales activity quarter by quarter. We do it for every town and suburb in Australia. Another example, this is Bowral in the Southern Highlands, south of Sydney. You can also see quarter by quarter, big uplift in activity, in other words, demand. And as a consequence of that, the median price went from 600,000 to almost $1 million over a period of 4 years. And that's extraordinary growth, but we could see it coming because demand was built and the demand rises ahead of the price growth. And we put all that in a report we call the Price Predictor Index, and I won't spend a lot of time talking about that, but that's, if you're interested in that, that's the report to get. But this is what we've seen happening in Perth. We're looking for suburbs with rising demand. And 18 months ago, when we did the research, we couldn't find any, not a single one in Perth actually had a trajectory of rising activity. But then it started to change. Quarter by quarter, the number of suburbs that were growing increased. We've just done the latest one. It's not published yet, but the latest quarter is 49, so it's another increase. So you can see the pattern there. It's another indicator. This is why, probably the biggest single reason why we're excited about the Perth market, because demand is rising. The number of suburbs that are starting to get that growth trajectory is growing from 0 to almost 50 over a period of 12 or 18 months. And that's really significant. And the other thing that I just want to touch on again is that factor of the top end market rising. Certainly happening in Perth. It's not happening in Brisbane, it's not happening in Darwin, but in Adelaide, Canberra and Perth definitely is. And why is it so? Well, as I said earlier, because the economy is improving, the people at the top end earning the big money are starting to feel pretty good, better than they have for a while, and they're starting to spend it on prestige real estate. So just to summarise the points I'd like you to take home with you tonight. The first and most important one, we don't have one market. The media keeps talking about the Australian property market. What's happening with Australian property prices? It's a furphy. We don't have one market. We have lots of different markets, and they're all driven fundamentally by local economic events. Think small for big growth. That's the smaller capital cities and some of our better regional centres. And some clues, pointers to look for. Buy where demand has risen, but prices haven't yet. And that points us, amongst other places, to Perth. Apart from the top end, we haven't seen across the board much happening in the way of prices, but demand has definitely risen. Buy in markets where the top end has risen, but the market generally has not. Again, that points us to Perth. And this one, buy in markets where leasing activity has improved, but prices haven't moved yet. So we've seen a big uplift in leasing activity, vacancies are down, and the first signs of rental growth. That's often a precursor to prices starting to follow. So those are the key points I'd like you to take home with you tonight. Hope you found that useful and interesting. But when you think, if you're sensible investors, you'll consider all of Australia your property market. And quite often people forget to look at their own market. Quite often when you're sitting in it, you can't see what's happening. You've got to step back, and it's people like us who are outside looking in, we can see the potential. And right now, I just think this city, as I say, is the city of opportunity. And we've been saying that for 6 to 12 months, and every week I think the case gets stronger. That's it. There ends the sermon. Thanks for listening.